Hello and welcome. You have tuned into Buy Now, Sell Now and Eat Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get all your stock-related queries answered by the expert. But before that, let's have a look at what the markets are up to. So Cheryl, there seems to be no stopping this Monday morning. The bull seems really to be charged up, taking the Nifty to a record high level. But I believe that that's the case day by day and the markets are bait in a consolidation mode.
Absolutely, Shrishti. Consolidation mode, you could say. This after hitting a fresh record high level once again in today's trading session. You had Nifty that was comfortably above the 21,000 mark, but from there on, we've given up some of those gains right now. Tad bit trading flat with a positive bias. You had Sensex that scaled 70,000 as well on an intraday basis. So both of them hitting fresh record high levels on an intraday basis, but now pretty subdued moves coming in when it comes to the benchmark indices. Ditto moves coming in for the Nifty Bank as well. That one also is seeing subdued gains at this point in time. But the broader markets are the ones that are actually charging ahead, be it the small cap index or the mid cap index, outperforming the benchmark indices in today's trading session, with the small cap index actually taking the lead. If you look at the advanced decline ratio, for now it is very much tilted in the favor of the gainers, but let's wait and watch out how it actually transpires for the rest of the day, just early hours of trading session. Talking about the list of gainers, then you have ONGC, Ultratech as well as UPL that are among the top 3 Nifty gainers. Add to the list, you also have Coal India as well as Power Grid that are gaining in trade today, while on the flip side, on the losing end of the market, is Dr. Reddy's. They're seeing a very sharp knock as we speak, 5% downtick coming in on Dr. Reddy's. You have Cipla that is also pretty subdued in trade today, 1% downtick coming in for Cipla as well. Apollo Hospital, Axis Bank and Wipro are the other set of losers. Talking about the sectoral indices then, and if you look at the sectoral indices, is the pharma index that is the top sectoral loser. That is actually a given, because given the fact that you have the top 2 losers on the Nifty from the pharma pack. Apart from that, all the sectors are in the positive territory, with the PSU Bank index in the lead as well as Realty index also holding on to strong gains. So that's the way how the markets are looking like at this point in time, Shrishti. But all eyes will also be on the steel sector in particular, isn't it?
Well, yes, that's the topic for Buy Now, Sell Now Lens today, because a lot of news flow regarding the steel sector. We have seen the prices shaping up, but what's latest happening in the steel sector? What are the channel checks suggesting with respect to the price? And going ahead in the second half, how is the demand expected to pan out? Let's get in all those details from our colleague Ashesha joining us right now. Ashesha, tell us more, what's happening with the steel industry?
Well, yeah, so the steel industry has underperformed in the first half of the year, and looks like the tide will not turn in the second half, and that perhaps the underperformance could continue in the second half of FY24. We are expecting a challenging H2 for steel companies. Remember, steel prices have corrected a whole lot. They've corrected by as much as 7% since early October this year, and raw material prices have not corrected in proportion, and hence profitability of steel companies is expected to be impacted in the second half of FY24. In fact, we have some channel checks which suggest that steel mills are now offering discount of as much as 1,500 rupees per ton. This is on account of higher imports, and that is what is forcing these steel companies to offer higher discounts to combat higher steel imports into India. In fact, Morgan Stanley also came out with a report, rather bearish report on the steel sector, where they say that steel sector underperformance is expected to continue in the second half of the year. They say domestic demand is very strong, but spreads are expected to remain range bound in the second half of the year. They say weak global macroeconomic concerns, domestic supply being higher than demand, and unattractive valuations is why they are bearish on the entire steel space. Inventory drawdown too is expected to remain robust. They are maintaining their equal weight stance on Tata Steel, SAIL, and underweight stance on JSPL, while maintaining underweight stance on JSW Steel as well. So for now, brokerages are not very bullish with respect to prospects in the second half. Raw material prices have not corrected in proportion to the decline in steel prices, and hence profitability, spreads and margins are expected to be impacted in the second half.
Alright, thank you so much for that, Ashesha, for actually putting into context what's happening in the steel sector, and looks like the underperformance will continue in the year 2024. But let's hear out from our experts actually what do they feel about the steel sector, and are they also seeing similar factors actually plaguing that sector when we enter 2024. Let's bring on board our guest for today. And looks like today is the day of Ashish, because we have Ashish Khyal on the technical front, while we have Ashish Maheshwari coming in for the fundamental side. Very good morning to both of you gentlemen. Thank you so much for joining us on ET Now. And Ashish Maheshwari, let me come to you first. And let's talk about the steel sector in particular, given the fact that you had Ashish actually outlined what's not working well for the sector and what are brokerages actually factoring in for the sector in the year 2024. What's your take coming in the steel sector? Do you think there will be any sort of a respite coming in next year when it means, when you talk about steel space, in particular in the entire metal pack?
Thank you for inviting both Ashish with same hairline in today's show. So, as far as steel is concerned, I'm not that bearish. First of all, if you see Nifty metal indices, 52-week high was 7,512, and still it's 7,400 mark. So market is not that bearish as far as steel companies are concerned. Though some price correction is there, and HR and CR prices, like your analyst was also pointing out. But market is now giving more focus towards companies which are doing more value addition. So companies which are making pipe or stainless steel, where demand is quite robust and import is also not possible to do for as far as pipes are concerned or specialty steels are concerned. So I'm of the view that traction will be there in the steel industry in second half, because there's very good demand as far as infrastructure sector is concerned, because again the next year is going to be election year. So steel is a sector which will continue to do well. So here companies which I like most are like something, and particularly in mid-cap companies which are doing well, like Sham Metallics or Jindal Sol, Lloyd Metal, etc. Where they are doing value addition, and quarter over quarter, in spite of all the odds, they are able to show good profitability. So we need to be more stock specific than sector specific in this industry. But I'm not that bearish.
Okay, so need to follow a stock-specific approach. That's the view coming in from Ashish Maheshwari, but quite an interesting day ahead, because both are Ashish, and a lot of viewers also might get confusion because they generally write the name of the expert that they want to get the advice from. But moving on, and let me address you as Mr. Khyal. What's your take on the steel companies? Anything that is looking interesting onto the charts, because all these brokerages, the target price that are coming, they are very quite near to the current market price of these companies. So any stock that is standing out to you on the technical front?
Yes, morning to you. And see, if you look at the overall...
Ashish, let me come in there. Actually, we'll try and connect with you or reconnect with you, because the line seems a bit patchy, and we'll get your views actually when it comes to the Tata Steel as well as the other counter that you're going to talk about. But for now, we'll slip into a break, patch that line, repatch that line with Ashish, and then when we come back, we'll talk about the metal space with Ashish Khyal and take your queries. So don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, an important case hearing in the Supreme Court, and we will get you the updates on that particular front. Right now, you have the Supreme Court bench actually delivering its verdict in that particular case. But as we were mentioning a short while ago, we will get Ashish's view coming in on the steel space. And Ashish, before we could actually hit the break, your line was a bit patchy. So if you don't mind, if you could tell us what were you talking about Tata Steel as well as the other stock that you like in the steel space?
Yes, see, if you look at the overall metal space, it has been hitting the 52-week high if you look at metal index, and that usually is a sign of strength. And even Tata Steel has shown a smart move from around 115 levels towards 129 over the past few weeks, and I think on the upside we can still head towards 140. So it is not looking very bearish from here. I am actually bullish on the steel space, and I think the overall sector will outperform. Usually during the later part of the inflation, when we see the material sector starts outperforming, and we are entering into that phase. So next one quarter, I think material stocks and metal sector can outperform, especially Tata Steel can head towards 140 and eventually maybe 160 levels on the upside. With the support for the stock on the downside is now around 125 levels. And the other stock that I think should do well is going to be JSW still we can clearly see a rounding bottom kind of a pattern, a very smart recovery from 725 levels to now around 830, 840 levels. And once the stock manages to break above that 850 mark, I think JSW Steel can head towards the level of 925 or much higher. So it can also outperform within the metal space. So Tata Steel and JSW Steel are looking bullish on the charts as of now, despite of the bearish fundamentals that we have, but the overall stocks are outperforming.
All right, on that note, actually, let's kickstart with taking all of a stock related query. We already have a lot of them pouring in, and we have Ashish Maheshwari who will be taking all your queries on the technical, sorry, I beg your pardon, on the fundamental side, while Ashish Khyal will actually answer all of your queries on the technical front. And let me take the first one. And this one is coming in from Indu, and Indu is saying that my favorite fundamental analyst is back on the show today. So now she wants to know a long-term view on Genesis International as well as Sirma SGS, and if possible entry level. This is coming from Indu, and this one is for you, Ashish Maheshwari. What's your take coming in on Genesis International? I don't know if you track this one, and Sirma SGS.
Genesis you can buy at any time. If you ask me, this is also one of my favorite stock Hindu. So you can't go wrong in Genesis International. Already stock is performing in last few months, and this will continue to do well. As far as Sharma SGS is concerned, again, this is again a stock which has delivered very good return, and I'm expecting very good set of numbers coming in from Sharma SGS even in this quarter. So for even for result point of view, you can buy, but both the stocks will give you very good return if you can even hold for 6 months. Time.
Okay, moving on to the next one then, and Mr. Khyal, coming to you to know your take on Mazagon Dock. Ravi Prasad is holding 300 shares from a price of 2,000 rupees a piece. Good to book out profits, or should he continue to hold on?
See, the overall trend for Mazagon Dock is being sideways. The stock is not done much, but there is a good momentum that can pick up because of the consolidation that we have seen recently. There is a possibility of a good breakout that can happen. So I'm going to hold on to the stock over here. On the downside, we'll maintain a stop loss of around 20,020 levels, and as long as, or around 20,000. As long as 20,000 holds, I think the stock can head towards the level of 23,500 on the upside. So hold on to the stock here.
All right, this next one is coming in from Yuvraj, and he wants to know about REITs investment in particular. Do you think that it makes sense to go ahead and look at Brookfield India REITs? And fundamentally, do you think that it makes sense, Mr. Maheshwari?
Yeah, as far as Brookfield REIT is concerned, the portfolio is good and is steady. But if I see the return compared to what a direct investment in realty stocks could give, Brookfield is a slightly underperformer. If you see, even the price is just 20 rupees away from 50 rupees low. So while other realty stocks are giving very good return, so instead of this, I'll suggest directly take a bet on realty play, where I like companies like Aryan Superstructure Limited, which is a Mumbai-based realty company, as well as Sova Developers. I think these two companies can give better return compared to Brookfield Realty.
Mr. Khyal, what's your take on GSFC? Subrata Mukherjee has these shares from a price of 195 rupees. Wants to know the short to medium term outlook on this particular name.
The overall, the GSFC is positive. Definitely, we can see the stock has moved from 180 levels to now around 221, and it has shown a very strong up move over the past few days. So the trend is bullish. It has also broken its previous price action resistance area of 214 and sustaining there. So I would be staying hold on the stock as of now and expecting a target of around 240 on the upside, and on the downside, one can maintain a stop loss of around 205 levels.
All right, this one is coming in from a viewer, Gopinath R, who's writing to us from Mysore, and he's actually one of our regular viewers of Buy Now Sell Now, and he's saying, as per one of our experts' advice in September, he actually looked to he bought Cummins as well as PNB shares, which are in good profits. Now, Ashish Khyal, he wants to know whether should he go ahead and book out some of the profits in these counters or hold on to them, or do you think that at these levels makes sense to add some more of PNB and Cummins India in the portfolio?
See, if you look at the overall stock, the perspective, if it is going to be from 6 months, 1 year horizon, I think there is nothing wrong holding on to the stocks over here. And Cummins India has already shown a very smart rally from the lows of after forming a double bottom around 1655 levels, and it is now quoting at 1950. So the overall trend has been bullish on Cummins India. It is best to hold on to the stock here and maintain a stop loss on the downside at 1870. And the other stock, if I understand, is PNB, which is Punjab National Bank. And in that case, also, if you look at the stock, it is currently quoting around 88, and we can see the PSU stocks have outperformed sharply over the past few weeks, and there is nothing wrong with it. So we are in a very strong up move across the broader market, and it is best to be nibbling across on dips, these kind of stocks, and holding on to it from 6 months to 1 year perspective.
Okay, Mr. Maheshwari, the next query is from Shayak from Bangalore, and he wants to know, have a take on semiconductor companies. He has listed down 4 names. One of them I haven't heard about. So, do you have any take on any of these? The list goes like ASM Technologies, RIR Power Electronics. The third one is Moschep Technologies, and the fourth one is Dixon Technologies. Is this the right time to buy any of these companies which are associated to the semiconductor space?
That can be Dixon Technology. The stock has touched 52-week high, but I think looking at even government has given PLI on these particular products what Dixon is manufacturing, and they are going to be big beneficiary of change in government history as they are promoting more domestic production of electronics and semiconductors. So instead of going for a smaller names, maybe they can be also multi-bagger over a period of time, but still I'll prefer go with the leader, and Dixon Tech is going to be pick number 1. Along with CG Power has also recently announced their foray into semiconductor industry, and this will be again a stock to watch for.
All right, this next query that I have is coming in from Deepak from Kanal, or I think it's from Deepak Kanal, and he is actually, okay, I think I've lost the query because someone is actually accessing the system at that point in time. But this one is for you, Mr. Maheshwari, and this one he wants to, Mani wants to know which is a best recommendation for a period of 1 year. But actually, rather than taking 1 year query to Ashish Maheshwari, I'll come to you, Ashish Kyal, and ask your view when it comes to which is a good investment for a year.
See, from a 1 year perspective, if you're looking at a stock like Larsen and Toubro, this stock, even when the markets were correcting about a month back, you can see was outperforming. And as soon as we see the broader market has started moving up, L&T has shown a very strong move on the upside, and it is just broken about the 52-week high also and sustaining that. So even if you look at the weekly charts, the momentum is very strong, and I think from a year's perspective, we can easily expect the stock to possibly cross about the 4,500 levels also. So 4,500 is the target for L&T, and any dips from here should be used as a buying opportunity. And one should not be worried even if the stock is at 3,000. I would rather start accumulating more around 3,000 levels if I ever get there.
Once again, coming to you, Mr. Kyal, Parvinder Singh wants a take on 2 counters. Firstly is NHPC, where he is holding 100 shares from a price of 71 rupees, and the other one is RateGain, holding 60 shares from a price of 591 rupees. He's at profit in both of these names, but can continue for the next 2 to 3 months. So what is the outlook? Should he go ahead with holding these names or maybe book out profits?
See, if you look at NHPC, we can clearly see a very strong rally in NHPC, and it has happened over the past week itself. And now it is just consolidating over past 2 or 3 days. But the trend remains strongly bullish. I think he can continue to hold on to NHPC. And on the downside, the support for the stock is at 59.80 rupees. And on the upside, we can expect it to move towards the level of 70. So looks strong on this chart. And the other stock, I mistaken the name. If you can please repeat the name of the stock.
His RateGain, he's been holding the shares from a price of 591 rupees.
Over here, I would suggest continue to hold on to the stock, maintain a stop loss of around 3% on the downside, and continue to ride it, because these kind of stocks that has given nearly around 112% written year till date, I think it is going to be positive. So one can continue to hold on, just maintain a trailing stop loss method of 3% below your the current price.
Just to get you a quick update on the case hearing that is underway in the Supreme Court, you have some very crucial commentary that is actually coming in from the Supreme Court as we speak. And what the Supreme Court is actually saying is the President can remove Article 370 even without Constituent Assembly. Also saying that the J&K Constituent Assembly recommendations not binding on the President. The other crucial commentary coming in is from the Chief Justice of India saying that J&K does not have the internal sovereignty different from other states in the country, and Article 370 was provided to Jammu and Kashmir as a temporary provision. So that's the case hearing underway. You remember, not the hearing, rather the verdict, the pronouncing of the verdict, it's underway in the Supreme Court. We will get you some more details on that particular front. But for now, very crucial commentary, pertinent points being made by the Supreme Court with regards to this particular case. But moving on then, let me take the next query that I have. And this one is coming in from Peter, and he wants to know about Webull Solar and if this stock is good for the next 3 to 5 years. I don't think you track this particular counter by any chance, Ashish, do you?
No, I am not.
Let me take this next one then, and this one is coming in from Gautam Balla, and he wants to know about DLF. 15,000 shares at a price of 104 rupees per share. Ashish Kyal, he wants to know whether he should book profits or hold till the stock actually reaches around 1,200 rupees per share.
See, first of all, I would like to congratulate him since he's holding on to DLF from these low levels and still riding up the trend, and it's around 665, 66 levels as of now. So it has been a very strong move on DLF. We can see the real estate space is outperforming, and I think he can continue to hold on to the stock. But will it double from here is the expectation of 1200. It is really difficult to say so right now, but I think from here we can expect a target of around 800 on the upside. The stock is outperforming. Hold on to here, the stock over here, and on the downside one can maintain a stop loss of around 620 levels.
Okay, moving on, and Mr. Maheshwari, what's your take on two counters? This query is from a viewer. He didn't mention his name actually. Okay, this one is from Katir from Bangalore, and he's been holding 100 shares of Adani Ports from a price of 780 rupees and 300 shares of JSW Infra from a price of 200 rupees a piece. They both have moved well and he's sitting at profits, but good to hold for long term and any target price on the same.
Good to know that somebody is port projects lover, and you have identified both companies which are into port development in India, and they are doing well. Both of these companies, and Adani Port, as far as concerned, again the market leader is there, and JSW is the second player. And the way now the EXIM business, that is export and import, is happening from India, I think these companies will go places. So I'll suggest to remain invested in both these companies. I'm expecting in next 1 year at least 30% upside in both these companies with virtually no downside risk left.
All right. On that note, actually, we will slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And moving on with the next query I have, and Mr. Maheshwari, the next query is on Jindal Poly Films. Rajesh Menon has bought these shares from a price of 690 rupees. Should he continue to hold this for a medium term maybe, or move out of this one?
Jindal Poly, as far as this is concerned, this is again a stock. Particularly, Polyplex used to be a leader, then Uflex, we have seen good run up. And now, for quite some time, these stocks are not going anywhere. Because again, there's pressure related to pricing is there, and whatever the margins that these companies used to enjoy earlier, these margins does not exist anymore. So, in my view, it's time to exit from Jindal Poly because in markets so many good opportunities are there. So why to stuck up in a sector which is not giving any good return. So my suggestion will be to exit from this and look at the stocks like Century Plywood, which is around 720 rupees, and performing very well. I'm expecting very good set of number in this quarter from Century Plywood. So you can swap Jindal with Century Plywood.
All right, this one is coming from Sahana from Chennai, and she has 100 shares of Amara Raja with a 17% profit or so. Ashish Kyal, she wants to know when should she look to exit this particular counter. She's mentioning that she's a long-term investor, but what's your take? Do you think now is the time to book part profits or book out completely, or stay put with it?
See, if you look at the entire space, the entire sector has done very well, and I think Amara Raja, she can continue to hold on to the stock here, and there is no reason for to exit as of now. I think it is going to outperform, and the overall trend looks bullish. The only thing is that maintain a stop loss of around 3% below the current price, 3.5% below the current price where the support is lying, and then continue to ride.
Okay, one more stock related to the auto sector, Ashish Maheshwari, and that is Subros, wherein Ajay has been holding 100 shares of this counter for a price of 470 rupees. One of the newsmakers today, after the government mandated that from 1st October 2025, there should be factory-fitted ACs in the trucks, and this counter is definitely a beneficiary with a 45% market share. What's the outlook? Should he continue to hold on? He can still hold for the next 6 months.
Next 6 months price target 700 in a nutshell, because again this is a very positive news for them. This recent government initiative that truck should have air conditioned cabins, and along with also one thing we must not forget, even if we see their last quarterly numbers, quarter over quarter their profit became double from 13 to 26 crore they reported quarter over quarter. So already business is under traction, and as far as market cap wise, if we look at Subras is still quite undervalued. So play for 750 rupees in Subras for next 6 months.
All right, this next one is coming in from a viewer who's not mentioned his name. I believe his name is RS Mundada from Pune, and he has Pondi Exides about 200 shares at a price of 460 and Allied Digital at a price of around 126. He wants a short-term view on both of these. Ashish Kyal, what's your take?
See, if you look at Pondi Exides, overall the trend for the stock is just sideways. I have not seen anything happening here. Overall, and the stock is trading around 442 levels if I'm not mistaken, and for quite some time the stock is just not doing anything. So it's better to be out from the stock and buy something like an L&T like we discussed earlier, or maybe a Tata Steel, and because it's highly volatile and not trending at all even in the current market scenario. And the other one is the Allied Digital. We can see that the stock has managed to show a good consolidation after forming a low around the levels of 120 and is just now sideways over there. I think it's going to give a positive breakout as a continuation pattern, and we can see the levels of around 140 on the upside. So hold on to the Allied Digital as of now for 140 over short term as the target, and maintain a stop loss of 120.
Moving on, and Mr. Maheshwari Subramaniam from Chennai wants a take on Himadri Specialty Chemicals. Another viewer too had his query. I don't remember his name, but recently the company announced that they're going to be making the chemicals for the lithium-ion batteries. Expected to be a good booster for this one. But you will be surprised to know that Subramaniam bought 60 shares from a price of just 57 rupees, sitting at great profits. What's the outlook on this one?
I think this is again a fantastic stock to own. As far as their specialty chemical business is concerned, this is doing very well. And their subsidiary, which make chemicals for lithium ion batteries, is also in quite in demand. And profit-wise also, if we see almost 200 crore they made in last 6 months itself. So company is doing very well, and it will continue to perform. My target for stock in the next 6 months is at least 350 to 375. Even at this price, I am recommending to add Himadri Chemicals.
All right, just to get you a quick update of the verdict or the case hearing that's happening in the Supreme Court. The Supreme Court has upheld the reorganization of Ladakh as Union Territory. They've directed the Election Commission to actually conduct elections to Legislative Assembly of Jammu and Kashmir by September 30th, 2024. Apart from that, what Supreme Court is saying, the issue of Parliament converting state to Union Territory is open, and they've also directed the government that the J&K statehood must be restored as soon as possible. So those are some of the recent updates coming in when it comes to that particular case in the Supreme Court. As you can see on your screen, 5-judge bench is actually declaring its verdict in that particular case. But moving on, this one is coming from Devi, who's writing to us from Hyderabad. She wants to buy 1,000 shares of Avantel and 500 shares of Avalon Tech. She wants to know the entry point for these counters as well as future prospect. Avalon Tech is a very recently listed counter. I'm unsure, Ashish Khyal, if you will have any entry point for that particular counter. But nevertheless, Avalon Tech and Avantel, do you think technically good stocks to buy right now for Devi?
Sector, both of these stocks, I think it will be good since we do not have much of the history. But I think considering the overall movement, it is fair enough to buy both of these stocks and continue to hold on to the stocks if you already have positions.
Okay, moving on, and Mr. Maheshwari, what's your take on DB Realty? Sushil has been holding the shares from a price of 205 rupees. Any targets on this one?
Yeah, I think these stocks which are predominantly working in Mumbai Realty, we have seen good performance from them, be it Oberoi Realty or Harptown, so Aryan Superstructure, Sumit Wood. So the DB Realty is again a stock which will continue to do well because there's quite good demand as far as realty and particularly residential market is there in Mumbai. So just remain invested in DB Realty.
All right, let me move on then. Let me take the next query that I have, and this one is coming in from a viewer and from Bangalore. And Anne has, or I think it's Ananya actually, who has HBL Power Systems, wants to know whether it's a good buy. She has already 200 shares, or I think she wants to buy 200 shares of HBL Power, and IRFC as well wants to know whether these counters are good, and also what sort of a target can one keep in mind while buying into these counters. Ashish Khyal.
See, HBL Power, we can clearly see the power sector has outperformed, and we can see that across the power space and power stocks. And HBL Power has also showed a very smart rally from the lows of around 300, which was made in November. And for now, it's quoting around 408. So the stock has already run up. I would suggest that use dips as a buying opportunity if you want to do a fresh investment, or maybe buy in a staggered fashion as long as the lows at around 350 remains intact, and on the upside we can maintain a target of around 460 levels over near term in HBL Power. And as far as IRFC is concerned, the stock has shown a very strong breakout in today's session, up by nearly 7% as of now as we speak. The volumes are picking up, and it has given a breakout from the triangle pattern, and the target on the upside of the pattern comes to around 100 levels. So there is a good enough 20% up move possible in IRFC, and on the downside maintain a stop loss for the stock at around 75 rupees.
Okay, Mr. Khyal, once again coming to you to have your take on IGL. Prithvi Raj Pawar is holding 250 shares from a price of 402 rupees. Any move expected in the short term?
See, IGL, we can clearly see there has been a sharp correction that we saw in the stock from 500 levels or to the lows of 375, and it is now trying to again retrace that up move. So I think the overall trend for the stock is bearish. Right now we are seeing a pullback, so it is near the cost price. Continue to hold on to the stock as of now, and if you get an exit at around 430, making some profit out of it, book out of the stock and rather be invested in a different stock, which can be something like a Reliance that looks much better, and 430 is the exit price for IGL.
All right, this one is coming in from actually Debasys, writing to us from Kolkata. He has a couple of stocks that he's mentioned. The second stock he's not mentioned which stock he's bought. So let me take the PCBL one. 500 shares at a price of 270.86 rupees per share. Ashish Maheshwari, he wants to know whether it makes sense to stay put with this one or exit. And when he exits this counter, should he look to actually go ahead and buy some other counter at this particular price? If you look at it, the stock is below his buy price right now.
No, it's fine. Even the stock is below at buy price because if you see, stock has moved quite swiftly from 200 to 280, and now this slightly under consolidation phase. Their recent acquisition of Pune with that Pharma, that is a specialty chemical, is also quite positive. So, in my view, we have seen a good run up in the stock, so some consolidation is happening. But you will see price target of 300 rupees in this stock between next 3 to 6 months. So stay put.
Okay, Mr. Maheshwari, one more query. That's on Oriental Rail Infrastructure, and Mayank Saraf has been holding 5,000 shares from a price of 115 rupees. Sitting at great profits in this one, but he wants to add this particular name to keep it for the next 2 to 3 years. So, what will be your advice?
See, I'm quite bullish as far as railway stocks are concerned, because in my view, the kind of capacity enhancement is going to take place in next few years is humongous, and all these companies which provide any support to railway will be direct beneficiary. And we have seen even in Oriental Rail Infra from 35 rupees stock has touched almost 175 rupees in last 1 year. So again, a stock to remain invested. Though I'm not advising a fresh entry at 165. I think 150 here can be another entry point here. But long term, 300 rupees you can expect in 1 to 1.5 years.
All right, on that note, actually, we will slip into a break on this edition of Buy Now Sell Now. And as we slip into the break, breaking news will be up on your screen. The Supreme Court has upheld the abrogation of Article 370 in Jammu and Kashmir. On that note, we slip into a break. We'll be back with more on the other side. Alright, welcome back to let's continue taking all of his stock related queries. The next one that I have is coming in from Sudarshana, who's writing to us from Bengaluru, and coming to you, Ashish Maheshwari. Considering the EV and bus segment push coming in from the government, she wants to know which is the counter that she can look to invest to reap benefit out of this government thrust coming into EV bus segment. Do you think the likes of JBM Auto or Electra Green Tech makes the cut, or do you have other names that one should look at?
The first pick should be obviously Tata Motors. They are one of the biggest again in EV segment, and the way we have seen the run up in the stock, I think this is a stock which is all set to go in Ford. Is it? Mind my words, in next 1 year you will see Tata Motors and Ford. Is it? And second stock which I like again is Electra Green. JB Motor, in my view, is slightly expensive stock, so I'm not recommending to buy. But Tata Motor, being a diversified company with good presence in EV, along with Electra, which is focused towards the EV, and a lot of their deliveries are scheduled in FY24. So these two stocks you can still buy.
Okay, moving on then, and with this, let's kickstart taking all your stock-related queries in the rapid-fire session. And Mr. Kyal, the first query is for you. PS Patra wants to know a 3-month target on LIC Housing. He didn't share his buy price, but just wants the outlook on this one.
If you look at LIC Housing, target price of 570.
Kyal, coming once again to you. Pramod wants to know Galaxy Surfactant. Do you think it's a good time to buy right now? Ashish Kyal, for you.
Yeah, so Galaxy Surfactant, I think it's better to avoid. We saw a sharp downtick over here, and on the upside, 2,800 is the major hurdle. If that is taken out, then consider buying it.
Okay, Mr. Maheshwari, Murli is holding shares of Venus Pipes from a price of 1,350 rupees. Wants to know the future prospects of this one. Good to hold or move out of this one?
Yeah, these pipes stock will continue to do well, so remain invested here.
Alright, this one is coming in from Rakesh Gupta, HUL, 200 shares, average price is 2,510 rupees per share. Ashish Maheshwari, stay put with this one or look to exit?
No, exit. This here is underperformer in FMCG pack. Instead of this, Dabur or Marico hold more potential.
Maheshwari, any view on Ratan Power? Shalini is holding 900 shares. She didn't share her buy price, but wants a long-term view on this one.
Yeah, remain invested already 9.5 rupees now stock. So slowly it is inching up, and some news related to their debt restructuring is expected in market. But remain invested.
Kyal, NTPC is the stock. Hamsa has 480 shares at an average price of 130 rupees per share. She wants to know whether she can buy some more at current market price. She wants to hold this counter for the long term.
Use dips towards the level of 270 as a buying opportunity and then aiming for the target of 350.
Mr. Kyal, any take on Sterlite Technologies? Poonam is holding 200 shares from a price of 159 rupees.
Sterlite Tech, I think the overall technology space should perform. Sterlite Tech continue to hold on with a stop loss of 138 on the downside, aiming for 170 levels.
With that, we come to the end of the rapid fire as well as the query segment with both the Ashish's, that is Ashish Kyal as well as Ashish Maheshwari. Thank you so much for joining us on the show and taking all of our viewer queries. And viewers, I hope you benefited from the stock queries that we've actually taken. In case we've not taken your query today, don't be disappointed. We will be back tomorrow and we will try and take as many queries as possible. For now, it's a goodbye from Shrishti, myself and team that put the show together. Stay tuned, Markets at Noon coming up next.